We suck at marketing, Island Glover, CEO and founder of Koala, admitted in good humor. Our PR probably doesn't want to hear me say that, but it's true. Glover's brutally honest statement is by no means a reflection on the company's work ethic or even its progress. Quite the opposite. The milestones the project has surpassed this summer have been an unintentionally well-kept secret, which makes its most recent announcement pretty surprising. Koala, an under-the-radar stablecoin based in Nashville, Tennessee, is being integrated into Ledger's hardware wallets. An integration by the world's largest hardware wallet manufacturer is a significant stamp of approval, especially considering it's the first stablecoin to merit the company's attention. I think it's indicative of what we're all about, said Glover, who also pointed out it was the Ledger team that originally approached Koala about integration. We're not the best social media mavens. We're not the best hypesters. The Ledger deal is indicative of when very serious companies and organizations take a deep dive into our code and look at what we're doing. The structure, the monetary policy, the algorithmic stability mechanisms, and say, this is the real deal. The integration announcement also came shortly before another milestone moment for Koala, the launch of its mainnet alpha version, Andromeda. Rethinking decentralized stability. Tether likely comes to mind for most people when thinking of stablecoins. The multi-billion-dollar market cap coin has become synonymous with its asset class. Although Truist, a rising competitor, has recently inserted itself into the conversation, both Tether and Truist retain their stability with underlying collateral in fiat. For both currencies, each coin is reportedly backed one by a corresponding dollar, though questions continue to surround Tether's coin issuance as it has never received an official audit. Outside of the fiat collateralized model, MakerDAO's stablecoin, DAI, pegs its value to the USD with collateral in cryptocurrency through what the project calls collateralized debt positions. Anyone can issue DAI with an Ethereum-powered smart contract, so long as they have an excess of cryptocurrency, usually Bitcoin or Ether, to back the issuance and hedge against volatility. Self-advertised as a non-asset-backed stablecoin, Koala breaks the collateralized mold that shapes the market's most prominent fiat-pegged coins. In fact, the only thing backing Koala is its mining protocol, smart contracts and some serious mathematical gymnastics. The coin's economic model is a play on the seigniorage shares stability mechanism proposed by economist Robert Sams in 2014. Taking its cue from the economic principle of the same name, the seigniorage shares model leverages smart contracts to keep a coin's value stable without needing to tie it to an underlying currency. Overseeing mintage, the smart contract would issue and buy back coins in response to price movements. If price goes above $1, for instance, the smart contract would mint more coins to compensate. If it goes below this threshold, then it would buy back coins until the price stabilizes. As a non-asset-backed stablecoin, Koala achieves the same end but through different means. Instead of smart contracts, the network's miners are in part held responsible for the coin's stability and distribution. When prices exceed $1, miners net larger mining rewards until the coin's price reaches an equilibrium. If the price dips too low, then all transaction fees are sent to a dead-end address and burned, taking coins out of circulation permanently until the price stabilizes. Koala utilizes a two-tiered token system to structure its stability mechanism. The first of these, Cussid, is the stable coin itself, serving as the network's native currency and its mining reward. The second token, Mused, is a staking token used to gain mining rights on the network. Miners must stake at least 30,000 million United States dollars in a mining client to earn Cussid. This week's Andromeda release sees the distribution of Youve to Koala's early investors. Fully regulated as a securities sale under the U.S. Securities and Exchange Commission (SEC) guidelines, Youve was only available for private purchase by accredited investors. In our interview, Glover said that Koala originally intended to hold a public token sale, but as the regulatory conversation became complicated, the team decided to err on the side of caution. We decided to play it safe rather than get slapped with a subpoena halfway into our token sale. John Ray Itano, Koala CTO, said, "Once the project gains traction and has sufficiently decentralized," Glover said, "there are plans to take its Youve sales public for unaccredited investors. Until that time, however, the team is looking to free up avenues for additional private investments, and it's working on a crowdfunding model with an undisclosed partner to this end." Glover indicated that Koala cannot reveal specifics due to securities guidelines. After launch expectations with Andromeda underway, Koala is standing on its own 2 feet, but by distributing the network's mining tokens. This alpha version is only just baby steps. It won't be until these miners begin minting and distributing QUSD, and these coins start trading on exchanges, that the project will truly test its balance and see if it has legs. Glover indicated in our interview that Koala is in talks with a number of top exchanges as the project enters a phase of seminal growth. These exchanges will provide the live price watching that the mainnet's upcoming BOTE's release, slated for September of 2018, hopes to introduce, along with the QUSD wallet app. As the project grows, the team plans to extend its stablecoin to additional currencies. Koala's roadmap has the Chinese yuan and Russian ruble in its sights. Glover teased that the project also hopes to establish a presence in Japan. They are tied up in NDA business talks with a multitude of top corporations. Until then, Andromeda marks the introduction of a hitherto unforeseen stablecoin model, lacking central control and governed by mathematical principles. QUSD adheres to Bitcoin's decentralized ethos by completely divorcing itself from underlying assets and centralized entities. If its mainnet functions fully operationally, as its testnet did in its controlled, theoretical confines, Koala could effectively set the standard for what a fully decentralized, autonomously maintained stablecoin looks like. With the distribution of RM coins, we come even closer to fulfilling the promise of the original Bitcoin white paper and creating the infrastructure that this industry needs to go mainstream. Mr. Andromeda brings an unprecedented level of decentralization to the stablecoin class, allowing users of the QUSD to forego the centralization problems that have plagued the space for years. Such a system will allow node operators around the globe to have ownership of a money supply mechanism that keeps the stablecoin within its target range around $1. Without that money supply being locked in a vault controlled by a small handful of C-suite executives, Glover said. #Ledger, #mining, #Koala, #stablecoin.